How are we doing today? So I'm trying to determine if this is a low energy Friday or not. And my assumption is that it probably is, but not for the reason that I attribute in previous courses. I think there are a lot of people in this room who are preparing for FAR, and they're really got a lot of work to do. Okay. Maybe some of it's AYCD, maybe some of it is attributable to AYCD, but not all of it. Okay. Well, we're gonna blame it on FAR. We're gonna blame it on the CPA exam. I have confidence in you all. You're gonna get through this, and you're gonna be better. So. So I don't think I really have any announcements to speak of. Yeah, we're going to be doing something a little bit different next week. So next week we're going to be talking about audit risk, and this is something I don't believe that anybody encountered it. Now I could be wrong about this. Okay, this is a project that was several years ago that I worked with one of my graduate students to develop a paper, and it was actually my GTRA at the time, developing paper. And I really wanted to use something on audit risk because that's what we're going to be covering in the CPA stuff is talking about the audit risk model, and I think it would be a good refresher. If you encountered this before, if you were in one of those classes that we talked about audit risk, which there was only one class, and like I said, I think it was in fall of 2022 or fall of 2023, which is before the time of anybody in this room. But I could be wrong about that. If you encountered it and you remember all the answers, just do your best with your group and try not to spoil too much of the information. But I do think it's going to be helpful. I expect that a lot of the information we're going to be going through is still going to look like it's brand new. But I'm trying to think. So fall of 2024. I know spring of 2024. Clayton, who else was in that section? And can't remember. Yeah, it's a long time ago. Clayton's the only one I can think of off the top of my head is in the section, but he and I talk about that all the time. I think everybody else took it like fall 2024 or spring 2025. So
I remember who was it? I sat next to Tyler Mall and Holden. Tyler Mall's in tax track, but Holden's gone.
Yeah, Holden was in the graduate program last year. Never. Okay. Let's get on to stuff that's more relevant to this day. Okay, so we've got some prep questions. By the way, I decided to do something a little bit different for the question that we're going to do at the end of the class period. It's going to be talking about a topic that you may or may not be familiar with. I know that we've talked about it because I've mentioned it both in 417 and in this course, but it was only like a passing item. I did this mostly because I wanted to see if you could use my judgment in approaching this. If you don't necessarily remember the answer, that's fine. We'll talk about the answer. It isn't a remembering and understanding task, but I wanted to try to approach something that you may or may not have memory of. So that's kind of my goal here. So let's get started. By the way, I apologize for these questions. I do think they're very valuable, but you may have struggled some bit on some of these questions. They were definitely a step up from the previous questions. Not that I don't think there were clear answers, but I think that there was a lot of thought that went into them, a lot of analysis you had to go to get to that answer. So if you find that you struggled a lot on these questions, don't feel bad. I've given these questions in previous semesters and I've gotten similar results. So an auditor's engagement letter most likely would include what? So let's just reiterate what the contents of the engagement letter are. So there's a lot of things that can be included there, but there's three things that are always included in the engagement letter. It's going to be manager's responsibility, auditor's responsibility, and the objectives of the audit. So those are what you're looking for. Now, that in by itself is not really enough to answer the question because there's a lot of references to responsibility here. You had to actually know what is the respective responsibility. So let's go through the answers and see if we can figure this out. Management's acknowledgement of its responsibility for maintaining effective internal control. So let's ask, is management responsible for internal control? Is that one of their responsibilities? Yeah, they're responsible for design, implementation, and maintenance of internal control. So that seems like our answer right there. Again, I don't want you to get in the habit of seeing the correct answer and moving on with your life. I know that you're in a rush, you got things to do, but we want to make sure we look through all the answers to make sure we're understanding what's going on. So what about B? The auditor's preliminary assessment of the risk factors relating to misstatements arising from fraudulent financial reporting. So I've got two questions for you. First of all, is this something the auditor has to do? Yes, it is, okay? Is it something that they have to share with management or they share it with any other party? It is not. This is an auditor-generated item that occurs after the issuance of the engagement letter. So the timing is wrong, and it's not something that we have to share. It's an internal documentation requirement. So that's an important distinction to make, is that even though it is an auditor responsibility, it's something they do. It's not something we would disclose at that point in time during the planning phase. A reminder that management's responsible for acts of non-compliance with laws and regulations committed by employees. Now, this is an interesting question. Is management responsible for employee fraud? It's not one of the things we've talked about, so it sure sounds like it's something they should be responsible for, but no, honestly, no, they're not. Okay, if upper management, we're talking about the executives management, if they find out that there's an employee scheme down there where there's just basically stealing items that are bound for a warehouse or something like that, management may be held accountable, but by and large, they're not responsible for. They're responsible for the operation of the company. So, and the issuance of financial statements, the maintenance of internal controls. I guess you could make an argument there's an ancillary relevance. The controls should actually address this problem, but that's a step from a step. Okay, it's basically saying their responsibility is controls, not the responsibility of what those controls are supposed to be put in place. And even then, we might argue that controls over one warehouse that employees are stealing from might be a little bit too much for it to be call management be responsible for. So again, C looks like it should be a possibility, but it's not. It's not as clear an answer. It's definitely not as clear an answer as A. What about a request for permission to contact the client's lawyer for assistance identifying litigation claims and assessments? They always include this in these questions, okay? Remember, we talked about these phase questions and say, what's happening during this phase? They always seem to include the contact of the lawyer. When does the lawyer contact happen? When do we as auditors contact the lawyer for this information? At the end of the audit. It's after substantive procedures. It's right before we issue the opinion, just to like say, is there anything else we need to know? And the lawyers will say, nope, nothing to my knowledge, okay? They always include this question to try to throw you off. And just remember, if you see this contact the lawyer, that contact the lawyer at the end of the audit, You're going to see a lot of questions that have got that particular item in there. And it's always wrong. It's always never the right answer. Always never. Anyway. What's the volume to prevent an auditor from accepting a new client engagement? So what are we concerned about when we're talking about accepting a new client engagement? We're obviously concerned about risks associated with it, particularly engagement risks, things that might cause problems with the conduct of the audit and might hurt our reputation, might basically put us in this situation where we're responsible for litigation. So let's go ahead and read through the answers again. Auditors not having a clear understanding of client accounting methodology. All right. Now, is that an issue? Yes. Is that an issue that can be solved? Yes. The auditor can gain an understanding of the client methodology. That's an easy solution. Management has a reputation within the business community for materially overstating its revenues. What do you guys think about that one? That's a problem right there. That's a problem. If they got a reputation of material overstating the revenues, then basically they may do that on the current period engagement as well. Now, again, could this be a situation where we say we're going to still do the audit? If we're aware of the risk, yes, but this is probably the most likely answer. Let's continue moving forward. The client accounting system is completely computerized, and the audit staff will be unable to access accounting data without the help of an information technology specialist. Okay. Boy, that's interesting, that disclaimer then, without the help of an information technology specialist. Is there a solution to that problem? Yes. Get an information technology specialist. Easy peasy, lemon squeezy. All right. Accounting data is only maintained in paper form for a short period of time. Now, if this is something that we were looking back like 30 years ago when all of the audits were done by paper, this might have been a problem. Most audits are done electronically anyway, so having computerized accounting data is not really an issue. So B is not necessarily something that we would refrain from accepting a new client engagement, but of the options given, this is the most likely one to keep us from taking on the new engagement. All the other ones can be answered pretty easily. Question number 3. After fieldwork procedures are completed, the partner of a CPA firm has not been involved in audit, performs a second or wrap-up review of the audit documentation. This is a factual statement that we've got the partner review, and then we've got the independent review, which is generally somebody who is not associated with audit or not associated with the engagement, that's in part of the firm, or we could actually, if we're a small firm, we could actually have another CPA firm do the review. So what is the goal of this? Now, keep in mind, we're talking about this review. This is basically a big picture review. We're trying to get not drill down into super specific details, but again, an understanding of, was the engagement conducted standards with gas, and did they follow the procedures necessary to obtain the objective, the opinion that was rendered? So what are going to be the situations that we were going to be looking for? So evaluation of significant judgments made by engagement team and related conclusions informing overall audit conclusion. Does overall audit conclusion sound like a big picture issue? It sure does, and that's going to be something we're going to hold on to. Now, again, don't just answer A and just move on. Let's go ahead and go through the rest of the questions. Fraud involving the client's management and its employees. All right. So first of all, this is not really giving any scope for what the nature of the fraud is. All right. If it's involving management employees, we're not really specific about, are we talking about highest level executive management? And if so, is the material? More importantly, is this a responsibility of the independent reviewer? Not really. Okay, not really. Okay, so that's not really a big picture item. It's a very specific item. I think B is a less specific answer than A. Materiality of the adjusting entries proposed by the audit staff. All right. Now, this is something that's very relevant to the audit, but again, we're talking about the reviewer. Are they concerned about this? No, this is again not a big picture conclusion item. So we would say that this is a less strong answer than A. Could the reviewer still want to look at this? Yes, but I think that they'd be more concerned about A than they would be about C. Communication of internal control weakness to those charged with governance. All right. Again, this is something they may look on, but this is not going to be kind of a big picture perspective. This is a very specific issue. So of the answers that are listed, A is the one that I think is the most relevant here. All of them could be relevant, but the most relevant is A, which is the frustrating thing about these darn questions is you got like 4 correct answers. You have to determine which is most correct. By the way, this is for an interesting note. I'm very curious as to what's going to happen in week 8. So for week 8, I've kind of done a fun activity for our in-class activity. We're going to be taking these CPA questions and pasting them into to AI tools, and you guys are going to have to determine what the results are. First of all, I have to say, are they correct? And if so, how did they get the correct answer? And if they're not, very first year we did this, which was 2 years ago, ChatGPT was like 2 for 8 on average with the CPA questions, and they did a much better job last year, but we were going to expand the analysis a little bit. So I think that's one of the problems with using AI tools. The AI tools can identify correct answers in context of themselves, but not in context of the whole question. That being said, some of you may have used some AI tools for some of these more difficult questions and may have had more success in the modern day and age. But I'm very curious to see what's going to happen when we do this for an actual assignment. An auditor is required to establish an understanding with the client regarding the service to be performed for each engagement. This understanding generally includes, all right, the auditor's responsibility for determining the preliminary judgments about materiality and audit risk factors. Now, we did talk about this in 417, but it's been a while. What does the client know about materiality and audit risk assessments by the auditor? Nothing. They are not exposed to that information. It's not something we disclose with the client. So it's not going to be a manager's responsibility for identifying mitigating factors when the auditor has doubt about the substantial ability to continue as a going concern. So this is something that management does have responsibility for their going concern, but it's not related to auditor's identification. They do their own independent verification or validation of that. So if auditor identifies it, this is something management should have also already identified. If there's a disparity there, that's a problem. So even though both of them have responsibility, management is not linked to the auditor's identification or the auditor's doubt. Auditor's responsibility for assuring those charged with governance are aware of any significant deficiencies in internal control that come to the auditor's attention. Now, this is an interesting language here. Those charged with governance. With respect to an audit engagement, who does this usually refer to? What is the name of that group? Their initials are AC. Audit committee. Yes, audit committee. Okay, audit committee. Now, the reason they didn't use audit committee in this context is we're talking about CPA questions, which many engagements may not have an audit committee. So it would have to be anybody who's charged with governance, like the board of directors, or some sort of subset assigned to the board of directors. That's not an audit committee. But if we replace those charged with governance with audit committee, what is a piece of information that has to be shared with audit committee? It has to be the significant deficiencies and material weaknesses in internal control. So this is a correct answer in context of what we've talked about. Even though we didn't use the language those charged with governance, we have talked about this concept. But let's hold on to C. Okay, move on to D. Manager's responsibility for providing the auditor with an assessment of risk and material misstatement due to fraud. Who is responsible for making the assessment of risk and material misstatement due to fraud? Is it management? No, that's an auditor. Auditor is the one responsible for making the assessment of risk and material misstatement. That's part of the audit risk model, which we just established above is responsibility of audit, not shared with management. So D is thrown out for the same reason that A started out. Boy, isn't this fun? You guys are going to miss this when it's done, aren't you? Yeah. Boy, this is misery. All right. Which of the following would not be considered a significant audit finding that should be included in audit documentation? This is my least favorite question of the bunch. All right. So the good news is we're going to get the answer right away. Retirement of accounts payable management or subsequent hiring of replacements. That is definitely not something documentation, because that's just basic turnover of the organization. If we're in a significant position like a CEO or CFO or one of the major executives, then we may say that might be something relevant. It might be a risk factor, but accounts payable manager probably does not qualify for that. Discovery of material sale recorded the current year that properly belonged in a subsequent year. Oh, this is not the question I'm thinking of. My apologies. This question is fine. Okay. Definitely a material sale. It was misclassified. That would be something we want to include in the documentation because that would be an adjustment that we force the client to make. Determination of substantial doubt about the entity's ability to continue as a going concern. We know auditors have responsibility for this assessment. And if they make that determination, it does need to be disclosed, not just in the report, because that's something that's included in the report, but also actually the details need to be disclosed in the documentation. Implementation of a new accounting standard that to account for a complex and unusual transaction. Is that something that's likely to affect the current period under audit? Yes, and so that's something that should be disclosed in the documentation. All right. That one wasn't too bad. Let's see. Maybe it's this one right here. Oh yeah, I hate this one. All right. Which of the following requirements is most accurate regarding audit or statements is most accurate regarding audit documentation requirements? The auditor should document findings that could result in a modification of the auditor's report. So this is asking if we have to change the report in any way, should this be reflected in the audit documentation? Well, the answer to this question is going to be answered to another question. What is the goal of documentation? What are the primary functions? Support the opinion that's being rendered by the auditor. Everything that supports, and even stuff that doesn't support the opinion being rendered, which hopefully it's not much of that, but anything that supports the opinion being rendered has to be included in the documentation. If that's the case, then A would be our answer. So let's go through the rest. If different audit procedures are performed due to lack of responsiveness by the client, the lack of responsiveness should not be included in the working papers. In other words, we tried to perform one procedure, like say we tried to do an inventory count. We said, let's set up the inventory count with the warehouse manager, and the warehouse manager ignored us. And then we contacted them again and said, oh, we've already done the inventory count. I said, well, that's great. How are we going to actually get our assurance with respect to inventory? So we perform alternative procedures. We look at subsequent documentation, which we know does not provide us nearly as much assurance, but we had to do something. So we say, we go into the documentation and said, we did a review of the subsequent documentation, the invoices, the receiving reports, and we got some assurance in this area. And then the partner says, why didn't you do an inventory observation? And they said, we tried to, but they never got back to us, and they did the observation without telling us. Or they did the count without telling us. So should that be something that we include in the documentation? Yeah, okay. So we don't leave that out. The lack of responsiveness should be included in the working paper saying, yeah, the warehouse manager was kind of a jerk. Yeah, that's not the wording we're using, but that's the implication we were saying. All right. Don't ever call anybody a jerk in the documentation. That will stick with you. All right. If oral explanation serves as sufficient support for the work the auditor performed, the explanation should be documented on the working papers. Now, this is one of those ones where Becker says, and the ICPA says, they will never use a trick question. And I think this is a trick question, okay, or a trick answer, I should say. So if oral explanation serves as sufficient support, it implies that there are situations where oral explanation would be sufficient support. What do we know about oral explanations, observation and inquiry? They're very low reliability, and therefore they have to be corroborated. So they're never going to be sufficient support. So we can toss this question out because that first statement will never be true. Now, again, the wording on this is terrible because you got some implication that there may be scenarios where that's the case, but that's the reason why C doesn't match. If the results of audit procedures indicate a need to revise the previous assessment of risk, the new assessment should be documented. All right, we're good so far, so we can just move on, right? That's an answer. That's the correct answer. We have two correct answers. And the original assessment should be removed. Oh, we're so close. We were so close. The original assessment does need to be included in there, okay? We need to have all information about the testing being performed. All right, question number 7. The internal control integrated framework. COSO, everybody remember COSO? Yes. Control environment and risk assessment, control and checks. I don't know what I'm holding my arms up for. All right, I'm trying to do YMCA, but it doesn't work. Anyway, COSO. So COSO has 3 objectives. What are those 3 objectives? Oh, I'm so disappointed. Reporting operations and compliance. Reporting operations and compliance, yes. So basically, those are our answers, but they sneak this in here and they give you answers that are not exactly equal to that. Okay, so let's go ahead and make some intuition understanding. All right, so ensuring all applicable laws and regulations are followed. Laws and regulations, what's another word for that? Compliance, okay, so that's one of them, okay? Transparency of internal and external financial reporting. So that sounds like reporting to me. I'm going to say it because it uses that word. All right. The safeguarding of entities' assets against potential losses. All right. That's a control, but we know controls relate to transactions and events, which would be an operational concern. So we have all three of ours. D says high-level goals established by leadership to develop the entity's mission. Now, could you make an argument that this is an entity-level control? Yes. Okay. And we know controls are operational in nature, but this one is far less operational than C. I would make an argument this is more strategic in nature, which would relate to the enterprise resource planning rather than the control objectives. So this one is definitely the one that's furthest away from being in one of those three categories. So D is our answer. Which of the following is a management control that can improve management's ability to supervise company activities effectively? This one's another bad question. I don't particularly like it, but it is what it is. So let's go ahead and go through it. By the way, you'll notice I ask questions that I don't necessarily like. This is kind of weeding through and saying, is this a question I like? No, I hate this question, but it's an important question to ask because they're going to be responsible for knowing questions like that. All right. Monitoring compliance with control requirements imposed by regulatory bodies. Now, is this a responsibility of management? Yes, okay. And it does refer to something in the COSA framework. It refers to monitoring, okay? Monitoring with responsibility. But we're talking about laws and regulations here, not necessarily the creation of new controls. So even though this is a responsibility, I think it's a far stretch to say that this is going to be something with respect to control activities, okay? Management control. So limiting direct access to assets by physical segregation of protected devices. Now, is this a control? Yes, it is, okay? Yes, it is. Is it a management control that can improve their ability to supervise company activities effectively? Do you think management's supervising safeguards over assets, saying, okay, make sure proper segregation duties exist? No. So it's a control, but it's not really a management control. Establishing budgets and forecasts to identify variances from expectations. All right, is this a control? Yes. Is it a management control? Yes, this is our answer. That's the one that's most directly relevant. But let's go to the last one. Supporting employees with the resources necessary to discharge their responsibilities. That sounds like information and communication, which would be an element of controls, but it's definitely not a management control. It's definitely not a management control that helps them supervise company activity effectively. So C is the one, and again, it's not a transparent one. It's not very obvious unless you think about what is it that we're specifically looking for. We're looking for a management control that's about supervisory activities. So Dr. Otero would be happy with this one. I don't know if she realizes that she teaches some auditing in her cost accounting course. You should actually tell her that. Says, yeah, Dr. Marks is explaining all the auditing you teach in your class, and she's going to be horrified and want to walk away completely from it. By the way, she's threatening that, so does everybody know that Dr. Otero is going to be retiring very soon? She's not retiring this year, but next year. She's threatening to make me teach her cost accounting course, which I'm very, very sad about that. Okay. So who else is going to teach us? I don't know any of the other professors. Don't I already teach a variety of courses already? But apparently she's bound to determine I'm going to be one teaching. To be fair, I have taught cost before, but it was a long time ago. At another university, I did it much worse than she did. Much, much worse. All right. Well, let's go ahead and talk about the analytical procedure stuff here. So we've got some marks or symbols that are not analytical procedures, but audit documentation. My apologies. So some tick marks that indicate procedures performed that are being audited in property, plant, equipment, and accumulated depreciation for Fox manufacturers. So basically what we're going to be doing is we're going to be going through here and looking at the symbols and determining what are the procedures that are being performed here. Okay, what are the procedures that are being performed? So for an important point of reference, the tick mark here, that's right here, refers to the item immediately to the left. So what is it that we would perform? What is it that we would actually look at, make sure that we have information about those particular items? Now, you can notice here, we've got property, plant, equipment, and accumulated depreciation, and all these have got different tasks associated with them. So let's go ahead and deal with each of these in turn. So both of these, both property, plant, equipment, and accumulated depreciation have prior year balances, and they've got this flag symbol, kind of a sideways triangle, and that's the first item that we have. By the way, hopefully when you got this, this was something you note. I got to this point and I realized that I could not find all the symbols and the symbols that were in Excel. So I just basically took a screen clip and I put it right here and tried to size the Excel page to do it. So hopefully it'll line up for you. If it didn't, I'm sorry. All right. I apologize, but I think I did a pretty good job. What would you score this out of a 10? Like a 8.6 or something like that? 8.6, that sounds good. Okay. Not perfect because you can kind of see the lines underneath, but still okay. All right, so looking at the balances, what is it that we're going to do with the previous balances? What is it that we want to do with that? So we want to look at the previous year's documentation. So let's go ahead and look for an answer. What do we want to look at? So we want to make sure that's valid. Now, this is an important point because if we look at the previous documentation, and if an unqualified opinion or an unmodified opinion was rendered on the previous year's documentation, we have a lot of assurance that these balances are correct. So that's going to be our goal here. So it says traced amounts to prior year's audit documentation. Now, this is an interesting one. Does that word tracing cause any problems for anybody else? What does tracing imply? Tracing is a very specific word in auditing. It's one of those words I said back in 417. When we see that word, we're going to think completeness, okay? So remember we had vouching and tracing are directional tests for existence, occurrence, completeness. This is one of those ones with that word tracing. Does it mean completeness in the situation? I would argue no, it doesn't, okay? This is tracing in kind of common vernacular, which really annoys me when Becker does this, by the way, because they should know that tracing means something very specific with respect to auditing. But ignoring that, this is probably our best answer. This is probably our best answer. I don't like the fact is we're not really validating completeness of these particular items. And the reason I make that argument is that completeness would be a part of it, but more wholly, we'd probably be more concerned with that the existence and occurrence of these amounts, because we want to make sure that assets are being reported the correct amount. Now, for accumulated depreciation, you may argue that completeness is the primary assertion, but it's not going to be limited to just completeness. It's going to relate to a lot of different assertions. Okay. What do we got next? We got this item going up and down for land. Okay, so we're testing the additions to land. Now, this is an important note here. So what did we talk about? We talked about fixed asset testing back in 417. What was our goal here? We wanted to validate the beginning balance was correct, because if the beginning balance is correct, we can validate the ending balance by just testing anything that's changed during the year. So that's additions and disposals or anything other that's going to be associated with that. So here's the point where we're testing additions. We already got this information that this is correct. We're trying to validate or verify that these numbers are correct, so we can actually determine that these numbers are accurate. So land, looks like there's been an addition of land or a purchase of land. Now, when you go and purchase land, I know that you all are famous prospectors from the Old West, but when you go and purchase land, what do you usually get associated with that?
A deed.
A deed, okay, a deed. All right, so let's look for that language. All right, examine supporting deed or purchase contract, cancel checks and assets video ledger and board of directors minutes, which again, I was a little bit sloppy here. I didn't make it fit the entire thing. My apologies, but it is what it is. Okay, so we got a good answer there. Then we've got some buildings and fixtures, okay, buildings and fixtures. And so if we're looking at that, now this is a little bit suspect because we have to know, but what would we be looking for in buildings and fixtures? And so there would obviously be some sort of purchase. But by and large, if we're talking about a new building, what's going to happen with new building? What is that word that's usually associated? Like if you're building a new house, that's going to be construction. Okay, so we're looking for some sort of reference to construction. Okay, so what would be a good answer for this? We can look at examination again because those answers are like there, but we've got supporting vendors, invoices, cancel checks. That's probably not sufficient. Examine supporting work orders and engineer reports, cancel checks, and asset subsidiary ledgers. And the reason I have a problem with this particular answer is this assumes that all these are being kind of created from the ground up. It's possible that you could buy an existing building or you could buy existing fixtures and you don't have to construct them. But ignoring that, this is probably not good. All right. What am I doing? Examining and reading the answers and not the questions. So now we're looking at equipment. Now, equipment is just going to be basically purchased, assuming that we don't build equipment from scratch, which that's probably an assumption that's probably relatively safe. Then we've got our other examination item. Sounds pretty straightforward. Everybody feel pretty comfortable with that? Want to make sure that we have our reference and documentation. Now, we've got the sideways arrows. Looks like the sideways arrows have to do with disposals, okay? Disposals. So what are we looking at here? So we're looking at some equipment that's being sold. So we're looking for a specific reference to equipment. Now, what are the natures of disposals that can take place, okay? There can be just kind of a sale of particular items. When you're done using them, you can sell them. You could just abandon it, which usually that occurs for really, really large assets, probably not equipment. It's not like you basically say, well, I'm driving this Toyota, I'm just going to leave it in the Magruder's parking lot. You know, does Magruder have a parking lot? I'm losing my mind. Okay. They do? Do not. I don't know. I don't spend time around Magruder, you know, so. But if there's a Toyota over there, I definitely did not leave that over there. Okay. Yeah. So we're not going to abandon our piece of equipment like that. So we could donate it, or we could, basically dispose it of some other way. So some sort of disposal. in all likelihood, if we're talking about equipment, we're probably talking about selling the equipment to some sort of outside area, but we're looking for any sort of reference to a disposal. So let's go ahead and look and see what we have. So I see the word sold and I'm immediately hooked. Sold 6 fully depreciated computers. Do computers count as equipment? Yeah, they would be assets in that regard. To employees, no audit procedures necessary. Okay. So this is an important one. Why is there no audit procedures necessary? Well, first of all, they're fully depreciated. I mean, their book value is what? So what's our materiality factor for there's a misstatement here? Absolutely nothing. Okay, absolutely nothing. So that's why we're going to be noting that. So they're fully depreciated. There's no doubt of that. Okay. Looks like they ended up getting 12,000, but they also had 12,000 offset here for the fully depreciation. So there's $0 book value. So that's kind of an easy one to note. It's probably not even going to expand the materiality if we just say we were concerned about the $12,000 by itself. That's probably not material. All right, then we have this, what would you call this? A stop sign, circle with a slash that an egg, an Easter egg. There we go. Does anybody like do those plastic eggs during Easter and you crack those open? Still do those or did those as a kid? We still do, Dr. Barnes, because we're kids at heart. Okay, good. Maintain that youthful vigor. All right. So the Easter egg here, we've got a $30,000 negative amount and $30,000 positive amount. Okay. Have you seen this as accountants before? What happens when something like that looks like something was changed? Like there was something recorded as one item and it should have been recorded as another item. So yeah, let's go ahead and look and see if we can find something that supports that intuition. Again, really, really important that we look and try to make an understanding of what it is we're looking before we start looking at our answers. So if we look, we'll notice that 2 reclassification entries, it's not so simple. We can say reclassification. So what happened here? So did they get properly or improperly classified originally as fixtures, or did they get improperly classified as buildings first? It was, first of all, it was the first entry was reclassification as buildings. So that was the error. So we need to record it as fixtures, not as buildings. So reclassification entry for fixtures erroneously recorded as buildings. Does anybody have a problem with that word erroneously, or do you all use that in just your vernacular? So they like talking about exams. It's like, how did you do the exam? Oh, I did okay, except for question 3. I erroneously answered question B instead of C. Or do you just say, I screwed that up? You know, what is the common vernacular for kids nowadays? Erroneously still used pretty often? No, I like how they use these words because they incorrectly, okay? Incorrectly, what it means. All right, let's move on. You can tell I'm in a pretty good mood. I'm rambling a lot today. It's like, just shut up, wrap it up, Dr. Barnes. We got things to do. All right, my apologies. So then we have a diamond here, and a diamond is going to be on the provision for depreciation, okay? So what is the provision for depreciation in the current period called? So when we're testing accumulated depreciation, what is accumulated depreciation made up of? We ever asked this question in financial accounting before? Like, you see accumulated depreciation and said, where does that come from? It just, God just kind of throws down numbers at the random. It's like, it's depreciation expense. Every depreciation expense has occurred over the life of a particular asset, okay? So we have a depreciation amount that exists, and then there's something being added to it. So this is the current period depreciation expense, right? Okay. So we need to test that provision for depreciation expense. Now, again, ignoring the fact that there's a wrong language being used, let's go ahead and look at the answer here. So trace the amount to the current year's balance in general ledger. So we're trying to test that amount. And then again, remember that we're trying to actually verify what it is that we're testing. What is this an example of? Again, ignoring the word that trace, because trace implies a very specific test, which I don't think that is going to be as relevant. I think actually we'd be vouching this because depreciation expense is more concerned. Yes, I could be wrong.
Are we looking at the diamond or the arrow?
Oops, sorry. We're looking at the arrow. My apologies. So
the arrow is at the end.
You're right. My balance. So this is the very end. Okay, so you're right. So this is going to be the ending balance. This is making sure that our balance is correct at the end. I knew I was doing something. Okay, just to really. Okay. Let's. That's why I'm completely totally baffled by what my words are coming out of my mouth. Okay. Ugh. Sucks being old. All right. So got the arrows over here. We're testing the ending balance. Again, we're not really testing right here. We're just trying to confirm what the ending balances are and make sure those are consistent with the balance there. By the way, this is relevant. I was going to mention this, but now that I'm using the correct item, what is this called right here when we're referring back to the original trial balance amounts? It's a cross-reference, okay? Assuming that we would actually see those amounts being here, this is where they're being tested. This is where the cross-reference of the items that we're looking at. So this would be the cross-reference we're looking for. Okay, then we have the diamond, okay? And the diamond makes a lot more sense here. So test of the reasonableness of the calculation. So depreciation expense, how is that often tested? How is that frequently tested? Well, that's actually one of the assertions that's associated, but what's the type of evidence that we will often use to test a depreciation expense? So let me ask you this. This will strike up a reminder. If I asked you to calculate depreciation, do you think you could do it? If the answer is no, I'm going to send you back to 220. I'm telling you right now. Okay, it's one of the very first things. So everybody in this room should be able to calculate depreciation. All right. So if you can develop an estimate, what can you prepare? So it's a specific type of evidence. Initials are the same as accounts payables initials. So we have a specific type of evidence that we can collect where we can actually look at trends over time, or we can develop an expectation. And this would be an example of a situation we can develop an expectation because Jared's finally got it. It kind of clicked. What is it called? Analytical procedures. Analytical procedures. What do analytical procedures do? They test the reasonableness of the calculation. By the way, if we were to look at this, could we actually look at the amounts and say, okay, this is my estimate. My estimate was 490,000, and this is 492,000. Is that close enough to be correct? What's always the answer to any question you don't know the answer to? It depends. What does it depend upon? It depends upon what is our threshold, what is our criteria. We're actually going to deal with an example of that in an analytical procedure later on. We're going to calculate tolerable difference. That is the amount that we can tolerate between our estimate and the actual amount. All right. Now we're done. I'll stop rambling. Have a good weekend, and I'll see you all on Monday.